and welcome to our IGM Structured Finance webinar. I am Angela Trabolsi, Head of US Structured Finance, and this is my colleague.
I am Kenji Ogawa, and I'm the Structured Finance Analyst here at IGM.
We're here today to share with you some recent trends and observations. I think we have to start talking about the 2024 record year breaking in terms of new issuance, with over 300 billion in new issuance in ABS. The consumer ABS sector had a strong 2024 and a healthy start of the year, led by autos all the way down from prime to subprime, credit cards, and personal loans. One investor told us that he's hyper-focused on the sector. Performance, 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 he said, on all consumer assets, including autos, credit cards, personal loans, and student loans, with ongoing concerns about how the customer is able to navigate the ongoing inflation, tariffs, growing debt, and ability to make payments on all financial obligations, especially in the subprime space. The esoteric ABS sector has been relatively strong as well, with deals such as whole business securitizations, data centers, fiber networks, device payment plans, and aircraft and solar ABS. The growth of securitization of data centers has been an interesting story. We have to look at it in more detail. We have been seeing the asset class since 2018, and it's been a fast-growing sector with many more issuers coming to the market with more regularity and attracting more mainstream investors. Data center ABS essentially securitized a pool of receivables from leases from various data centers, which is specialized buildings constructed to house IT infrastructure, such as data servers and cooling technology, as they host applications and data for customers. The demand for retail and wholesale data centers has grown significantly and will continue to do so as the proliferation and use of the cloud and artificial intelligence continues to grow, and demand is not expected to slow anytime soon. Vantage Data Centers, with 31 campuses across 5 continents, was the first company to tap the markets in 2018 with Vantage Data Centers 2018-1 and Vantage Data Centers 2018-2 in February and November of 2018, respectively. Over the last 7 years, the landscape has grown with many other data centers issuing into the ABS market. These ABS issuers have ranged in size from 175 million to 2 billion, with the largest being Flexential 2021-1, priced in November of 2021. Please see the slide for the number of data centers and fiber network issuers done in the last 7 years. As you can see, there's been a huge increase in issuance. Many data center ABS qualify as green bonds, which can appeal to ESG-minded investors as well. The most prolific data center issuers into the ABS market through mid-February of this year are as follows: Vantage Data Centers, Savvy Data Centers, Stack Data Centers, and CyrusOne. Some notable issuers that we have already seen this year are CyrusOne, Switch, and Compass, with others expected to follow in the coming months. The most recent priced deals earlier this month are Compass and CyrusOne, respectively, as you can see on this slide. CyrusOne priced a 575 million single A minus rated 5-year weighted average life class, which priced at 165 basis points over benchmark, on the tight range of the 165 to 175 basis points over benchmark. Compass had a 3-tranche offering at 387.5 million single A rated 5-year, which priced at 135 basis points over benchmark, at 387.5 million A rated 7-year, which priced at 145 basis points over benchmark, and then 110 million A minus rated 5-year, which priced at 155 basis points over benchmark, all of which were 25 to 30 basis points inside of the price guidance range as you can see on the slide. Additionally, from the technology sector, we have already seen several fiber network deals and device payment plans for Verizon and T-Mobile. From the solar ABS sector, we have seen several deals come to the market since the start of the year, such as Solar Mosaic, Sunrun, Sonova. The solar ABS sector has seen steady rise in delinquency rates and faces uncertainty over the fate of federal tax incentives that have incentivized solar panel customers in the past. That said, we expect to see modest growth in issuance of solar ABS sector for the rest of the year. And now, Kenji, what are you seeing?
Hi, hello everybody. Pleasure to be here and hope everybody's doing well. I'm Kenji here at Informa, and today we'll give you a quick rundown of what happened in 2024 regarding new issuance in the ABS auto sector, as well as non-agency in both CMBS and RMBS markets, and what some of their median AAA pricing spreads did throughout the year. In 2024, all the major securitized credit markets underwent heavy issuance exceeding that of 2023 volumes. Like my colleague Angela mentioned, the overall ABS issuance came in with over 300 billion in size, with autos comprising the largest sector within ABS with a total of 140 billion. Issuance was robust throughout the year due to the stronger consumer demand for auto loans, strong investor appetite, and a favorable monetary policy towards the end of the year. Having said that, delinquencies have been tracking on an upward move since mid-2021, but its uptrend has since more or less normalized, remained relatively stable, and has been more concentrated in the subprime sector. Spread-wise, the new issue 2-year AAA prime auto paper saw them range-bound from 70 to 81 in the beginning of the year, steadily tightening and reaching the mid-60s by the start of the third quarter, and hovering around those levels until finally finishing the year at the low to mid-50s. Switching over to non-agency CMBS issuance, we saw the market in 2023 being restrained by economic uncertainty and higher rates, with the 10-year reaching its peak of 5% in October of 2023. 2024 was a different story, as improved sentiment and declining yields to a more favorable and conducive levels in the first half of the year contributed to the rebound in issuance volume, in fact, almost doubling from the year before, led by single asset, single borrower sector, which increased the most and comprising of roughly 2/3 of that market. It wasn't all positive, as delinquencies mainly in the office sector spiked, almost doubling year over year, adding some concern within the CMBS sector. With respect to spreads, we'll single out AAA with a 5-year average life and saw its median spreads relatively stable, starting at the low to mid 120s in the beginning of the year, tightening for a bit until the end of the first quarter, but gradually widening back to the high 120s and low 130s and staying there for the majority of the year. November and December came along, and when 2 rate cuts from the Fed materialized, we see median spreads at 115 to 95 basis points at the end of the year. And finally, we touch upon a non-agency RMBS. This market saw recovery from 2023 volumes in tandem with the other sectors as well. Anticipation for monetary easing, refinancing, new production, and strong mortgage market fundamentals pushed the new issue supply and continued its strong performance throughout the year. Non-qualified mortgages represented the majority of the issuance in this sector. In early 2024, we saw the pricing spreads in AAA RMBS with a 2-year average life print at levels from 153 in January to 140 in May. While inflation trended lower during the year, headline numbers remained above the Fed's target at mid-year and saw pricing spreads settling in the high 130s to mid 140s until September came along with reassuring inflation and economic numbers, finally giving the green light for the Fed to ease. Pricing spreads therefore tightened for the rest of the year, reaching to the lows of 125 in December. So as you see, in 2024, record issuance overall and tightening spreads towards the end of the year was seen for quality AAA paper in these particular sectors. As for 2025, there has been no slowing down in issuance, but multiple factors will ultimately determine how 2025 will shape up the rest of the year. The newly appointed U.S. administration and its economic agendas, changes and expectations in monetary policy, persistently high interest rates, change in investor risk appetite, delinquency rates, and of course, what everybody's talking about most, inflation. But if economic landscape manages to withstand these headwinds and stay stable, then we can probably expect another banner year of record issuance, and with record issuance, tighter pricing spreads will likely follow. I now pass you on back to Angela. It's been a pleasure being with you, and have a wonderful day.
As Kenji mentioned, the CMBS sector has been very busy in 2024 and thriving since the start of the year. There has been an increase in single asset, single borrower CMBS offerings, as they have been fairly well received. The asset class appeals to some investors and are quicker to get price, as it is easier to do the analysis just delving into a single obligor with a well-known business model and exclusive high-end property. This is in comparison to conduit CMBS, which have baskets of different properties across different industries and different states for diversification purposes, but they also have the office and retail components that are currently facing defaults and occupancy challenges. A notable single asset, single borrower CMBS that priced at the start of 2025 was the $2.5 billion Hudson Yards Spiral Fixed Rate CMBS. The Spiral, a recently constructed 2.84 million square footage, 66-story Class A office tower located in Hudson Yards in Midtown Manhattan, is an example of a premium high-end office space that priced well inside the initial price guidance levels, as you can see on this slide. All 5-year weighted average life tranches from AAA down to BB priced anywhere from 6 to 30 basis points inside the original price guidance, as you can see on this slide. So these are some of our thoughts on the market. We've really enjoyed having you and hope to have a stellar 2025 year. Thank you for attending.